Hi, I'm Megan Marlin, and this is PwC Tax Insights in Brief. Treasury on September 22nd released proposed regulations addressing the temporary federal income tax deduction created by the One Big Beautiful Bill Act for individuals who receive certain qualified tip income. The Act includes significant modifications to the tax treatment of tips, effective for calendar years 2025 through 2028. The guidance clarifies the definition of qualified tips for employers with tipped employees and enumerates the occupations that customarily and regularly receive tips on or before December 31st, 2024 for these purposes. The proposed regulations will help employers identify qualified tips paid to employees in one of 8 categories of occupations that regularly and customarily receive tips. This guidance gives needed information to employers to be able to manage 2025 and beyond reporting considerations and new forthcoming federal income tax withholding tables. Treasury may specify a reasonable method for employers to create and furnish a separate accounting of qualified tips and overtime pay for the 2025 calendar year. The IRS acknowledged on its website that it will provide transition relief for tax year 2025 for taxpayers claiming the deduction and for employers and payers subject to these new reporting requirements. Employers will also need to consider how their point of sale system and tracking mechanisms differentiate among the types of tips received and reported by employees, such as auto gratuities versus voluntary tips and pool reporting. Employers also will need to differentiate among employees based on job classification. Given the time needed to implement reporting solutions, employers should consider addressing these administrative challenges efficiently by putting processes in place now to capture what must be reported to employees pending additional IRS guidance. For more details, read the attached insight. Thank you for watching. This has been PwC Tax Insights in Brief.